Hello, my name is Brock Vandenberg and I'm the President and Chief Operating Officer of TaliMar Financial, a hard money lender here in San Diego, California. We offer trust deed investors the opportunity to invest alongside us on the trust deeds that we invest in. Simply visit our website at talimarfinancial.com, click under the Investor tab to available trust deeds to view some of the trust deeds that we currently have available. A common question that I get from investors is, what is title insurance? Title insurance is one of those items when investing in trust deeds that are imperative to have, especially a lender's title policy. Lender's title policy simply insures your lien on that property. When I say it insures your lien, it simply makes sure that the trust deed that you record on that property is in the position that you intended it to be, and that there's no other liens on that property that could compromise your lien. Now let's take that definition and use it in real world terms. Let's say, for example, you have a borrower that approaches you to secure a first trust deed on a residential property. The residential property is worth $100,000 and you've agreed to fund a $50,000 trust deed on that property. Well, that trust deed is at 50% of the value of the property, a relatively safe investment. Let's say you go to record that deed of trust and find out after recording the deed of trust that the borrower had another deed of trust already recorded on the property for, let's say, $100,000 or for the value of that property. Now your first trust deed is in second position, and the combined loan to value of the first of $100,000 and your second loan is $50,000 greater than the actual value of the property. Your investment has not only completely changed, you could find yourself losing money. Had you had a lender's title policy, number one, you could have reviewed the actual title of that property and probably found that there was an existing lien already recorded on the property. But number two, if you had not located that, your policy would have paid you a claim for any money that you would have lost as a result of not picking that lien on the property up. Now, one of the questions I do get about lenders' policies is who typically customarily pays for it. Now, in most cases, the borrower pays for the lender's title policy. The cost of it is predicated on the actual loan amount, in addition to any additional insured components you want on that, or what we call endorsements on that policy. Now, the process of obtaining a lender's policy is quite simple. If you're new to investing in trust deeds, I would highly suggest that you work with some local real estate agents or brokers and ask them who they prefer as a title company. Reach out to that title company, find out who the local rep is, and set a meeting with them. Talk to them about what you're looking to do, that you're looking to invest in trust deeds, and you would like to utilize their services to ensure your trust deed investments. That title rep would be more than happy to talk to you specifics about investing in trust deeds, probably give you some contacts within the industry, and then talk to you about title insurance. Step two is when you actually locate a trust deed investment opportunity. When you locate an opportunity and you've agreed to terms with that borrower, you would reach out to your title rep and obtain what's called a preliminary title report. That preliminary title report provides all the information, or most of the information you need on that property. It'll tell you what the APN number is. APN number is simply the number the county uses to designate that property. The property description, which is important because you want to make sure that the property you intend to be securing your deed of trust on is actually the property that that borrower owns. The owner name, again, to ensure that the borrower that's coming to you is actually the owner of that property and can actually sign a deed of trust and record it against the property that he owns, in addition to any other liens on the property. So it'll list any existing deeds of trust, if the property taxes are outstanding, if there's any judgments against the borrower on that property, and any other remainder liens that may be on the property that would compromise your lien on that property. I also suggest reaching out to the title attorney to review that preliminary title report and to make sure that you're not missing any items on that preliminary title report that, again, would compromise your lien. Assuming that the title on the property is clean, that you can record the deed of trust in the position that you intended it to be, you would go ahead and draft the deed of trust, provide it to the title company, who would then record the deed of trust. I would highly suggest that you work with a third-party escrow company to do so. Here in California, an escrow company is just simply a third party that works as an intermediary between you and the borrower. And both you and the borrower provide them instructions to execute, to record that deed of trust, and then they would work as the third-party person with the title company to provide them the signed deed of trust and to ensure that it is recorded appropriately. A couple tips about working with title companies. Again, they're very helpful. They'll provide you preliminary title reports. They'll provide you property reports, which again is similar to a title report. And they're here to answer, or they're there to answer any questions that you might have about the industry, about what a title policy is. Now, let's say in the unfortunate circumstance that you find that there is a lien after you've recorded on the property that has compromised your lien. You do what we call is submit a claim to the title company. So reach out to your title rep and or the title attorney that you were working with and explain to them the situation. They'll take down notes and see what they can do to assist you in ensuring that your lien is actually in the position that it was originally supposed to be, and if not, they'll go ahead and set you up with their attorney to do what it takes to either recover any proceeds that you may have lost as a result of the mistake and get your funds back. So just as a recap to what we discussed, title insurance is an extremely important component of investing in trust deeds. It insures your lien on that property, and it insures your lien in the position that you intended it to be on the property, if it was first, second, third, or whatever position. In addition, working with the title company is extremely important because they can provide you a schedule of any liens currently on the property. And then if there is a claim against the property, they can assist you in recovering any proceeds that you may have lost. For more information on investing in trust deeds, please visit our website at TaliMarFinancial.com or contact me directly at 858-613-0111 extension 1. I look forward to hearing from you, and please take a look at some of the other informational videos that we have offered on our website. Thank you.